Hi and welcome back to the channel Retail Investing and Trading. In this video, I'll be covering in my opinion, the single most important thing when we talk about trading and profitability. And what you guys think, what would that thing be? Yet a lot of people, actually I've heard a very few people talk about it, and even smaller amount of people actually do it. But I know for a fact that everybody who does it eventually finds profitability if he or she stays consistent enough with the thing. And obviously the thing that I'm talking about is backtesting, but it's not EA backtesting. It's not like computer backtesting. It's actually manually going through the markets, candle by candle, manually marking down strategies, patterns, whatever you're backtesting, and seeing how would it play it out if you were to trade it live. So in this video, I want to show you uh, a few things. First, we will go over obviously Aussie dollar that I have on my screen right there, all the way back to one of the trades where I stopped my backtesting. As you can see on this screen, I'm currently backtesting bats on Aussie dollar from 2013 to 2018, and I'm backtesting Gartleys. Also, what you can notice is that the bats, 50 trades that I've done, and I think that I spent at least a minute or two per this trade entry in this spreadsheet. Uh, so I lost 50 minutes. I invested 50 minutes, maybe 100 minutes, minute and a half, 2 minutes per trade, only to find out that the bets, the way that I'm trading them, are not gonna be profitable for me. This is raw data. At the end, I have a backtesting tune-up, but whatever I tried up until now, it didn't yield out any profit. However, by noting down the 44 trades of Gartley on the same chart, Aussie dollar Gartley since from 2013 to 2018, I can see that I'm profitable 911 and 19 pips. Although that means that I'm profitable 63% of times, 23% of times I lost the trade, and 14% of times I had a scratch. So let's see what is backtesting for me. In this video, I'll be going over, you will see me using an Enigma toolbar from a company called Tier 1 Trading, where I'm a member as well. And these guys significantly changed my trading. So I'm going back to the date, let's see, to April of 2015, or well, May 2015. Okay, in my charts, let's go there. I gotta bring my data box. We're in 2017. April, May 2015. All of these guys, which you can see blue triangles and yellow triangles on my screen. Yellow triangles are my markings for Gartleys, and blue are my markings for bats. Okay, so we are in 2015 right now. We gotta go into, right, what do we have? 12. Okay, this is 22nd of April. Okay, I think 12th of, and this we have, very good. Okay, this is one of the Gartleys. When I'm coming here, okay, so if the market was live, I would move through market like this. Okay, I would see each candle as it prints. I wouldn't see it before. So that's exactly how I do my backtesting. I move candle by candle like this with the keyboard. Then I mark down my X to A leg, A to B, B to C leg, and then I put so-called my pending orders and wait for the price action to hit the pending orders. As you can see here, X to A, A to B, B to C, C to D, and the completion is called the point, the price point where market price action will trigger my entry. Now, I don't want to go in specifics of trading rules for Gartleys and for the bat because I will cover this in one of the other videos, and I will you can check those videos out in the description, or at the end of this video you will be recommended two other videos where we will cover cipher rules, bat rules, and Gartley rules. Okay, so price action triggered my entry here on this candle. Let me just set up something. Fibonacci. Okay, so price action, let's see this. There we go. So this candle right here around 5 o'clock in the morning GMT zone triggered my trade into Gartley. That means that was at a price point of 79.26. Okay, so I go down to my spreadsheet on a Gartley and I write down everything that I just showed you. Okay, so we are back. So I will write down everything from this. But what I'll do right now is I'll move my chart all the way to the left so that I can watch the chart as I write this down. It makes my life a lot easier. So I'm in Gartley and I can see that the date that had this happened was 22nd of May. So I put 22nd of May 2015. The time was the time was the 5 in the morning. The position was short. The entry price was 79 to 61. Initial stop loss was 79,436, and target one prices. This is a little bit tricky. So why? Because per rules for the patterns, per traditional rules, as soon as you get hit, you set up your targets one are from fib levels from A to the completion point. As you can see, and the target one is 38.2 and the target two is 61.8. And these targets here align with these fib levels. However, price action moved against me a little bit here. So I gotta adjust my target levels. Okay, so I will move my 0.0 fib point here and my 100% I will just adjust it. Now you can see that actually I have to move my target 1 position here a little bit higher and my target 2 position a little bit higher as well. Okay, so this is the price point for target 1, 79,041, and for target 2, 78,872. So I will write those down. Let me just move it. Target 1 was 0.79041, 78,872. So the close date is, I usually put the candle which hits the stop loss or hit my second target as a close date for the position. So it happened at 11 o'clock, the very same date, 11 o'clock. Position 1 exit was 79.04, 780.87, which makes me, if I were trading live this trade, I would make 61 pips. But I also note down some other important points, at least for my way of trading, which are overbought or oversold conditions based on a conventional wave 3070 or extreme overbought and oversold conditions. So if it's overbought and overbought, I put 1. If it's oversold, I put -1 in these columns. So here, and I note this down on the previous candle to the entry candle, which will be at 4 o'clock, and that gives me the RSI of 83.35. I can actually show you this. Let me bring this chart back up. Okay, this is my entry candle here. This here is my previous candle, as in you can see in the data box, RSI is 83.35. So I will note a few other things, but I will not bring charts back. I will just write them down in front of you here on the Excel spreadsheet. So we have overbought here. We are also overbought over 80. We have X to D divergence. So I'm looking at the X point and the D point, and I see the X point RSI is lower than the D point RSI. So we have one because the divergence is true. Fib for level C is 88.5. Two candles leg, no, we had more than two candles between every leg. We had more than two candles for the completion. Peak of X point RSI is 50.47, and either it's overbought and oversold. This is like my small mathematical formula. If I have the overbought oversold conditions and or x day divergence, I put one. If any of these are ones, I put one here. And is X point RSI above or below 40 and 60? In this case, when I'm going short, I want to see the X point RSI has to be above 60. In this case, it's not, so I will put 0 here and I will press save. And that is how I'm backtesting and how I backtested over 2,400 trades. And if you do so as well, you will see that you will get that confidence that you can trade this live, because you will get used to seeing patterns all over again. You will get that experience of market. You know that you can occur 3 losses, lose some money, go into drawdown, and then get back up from this drawdown. Look at my equity curve. If I were to trade this pattern from the beginning of from the 15th of January 2013 all the way to 22nd of May 2015, I would gain 20% profit just off of this Gartley trading. And basically, guys, that's it. If you want to check out some rules on bats and Gartleys, check out the videos that I'm linking below, and check out the videos at the end of this video. Also, make sure to subscribe and hit that bell button. Anyway, talk to you soon and take care. Bye bye.